Welcome. This is BERT Dohmen with Making Money. What's next for the market? October 22nd. Thank you for joining us this evening. First, let's take a look at the Dow Jones Industrials chart. This is a daily chart, and we can see the nice rise this year. There was a little pullback here in August, and then Wall Street had to push the market back up in order to have a good environment for the big Alibaba IPO. And as you know, Wall Street made over $300 million in fees on that, so it had to be a success. And here's how they pushed the Dow Jones Industrials up. There are only 30 stocks. Most of these shares are locked up in long-term institutional portfolios. They're never touched, so it's easy to manipulate this index. The top here was September 19th. That was the IPO day. And I had said on CNBC on April 21st, when we discussed Alibaba, I said, whatever Alibaba is launched, that will be the day of the top in this market. And so it was obvious that that would happen. And so we nailed it to the exact day. So that was the day that in our services for traders, we turned around. We went from long to short on this day. And of course, we had a nice decline here, which when you're short is very good for your portfolio. So now let's see where we're going from here. What happened is we got a lot of technical damage. Here's a long-term uptrend line, and that was broken here. And as you can see, when that trend line was broken, it was like a dam breaking, and the market plunged. Here we see the red line. It's a curve. This is the 200-day moving average. A lot of traders consider that the difference between a bull market and a bear market. And you can see here that was broken on the same day as this trend line and caused a lot of selling. So when we take a look at the volume was rising going into this decline. And now on this rally, the volume has been declining. That's a bearish pattern. Rising volume on a declining market, and then declining volume on a rising market. That is not good. So the Dow Jones Industrials is an index that has problems. On these here, you see these dotted lines. These are Fibonacci retracement levels. And Fibonacci was a 12th century mathematician in Italy, and he discovered these ratios, numerical ratios everywhere in nature. And if we use our computer, and it draws in these lines for us, we have here, this is the 50% retracement level right here. And that is usually the first significant resistance in a rally. It's possible it can go up to the next dotted line, which is 61.8%, but so far the Dow has not done that. So the 50% level stopped it yesterday, and today then caused a decline. Here we have the S&P 500 index. So let's see how the Fibonacci levels are doing on that. Here we can see the 50%, and here's the 61.8% retracement. The S&P got to the 61.8. This is usually a much stronger resistance, and yesterday it stopped the market from rising further, and today it stopped the market and reversed the market. So here we can see the same thing happening in August and September. The market was pushed upward. Here was the Alibaba IPO price, and then the market declined. We used the 50-day moving average, it's this one, as an early caution indicator, and that came right on time when it was penetrated. And here's the 200-day moving average, and you can see what happened here when that was penetrated. This low here in August is now very important. It was penetrated here with ease when the market broke through. Now the market went above it. Now we have to see if the index can hold above this line. So that is something that we're going to be watching very closely in our Smart Trader service, which is for short-term stock traders, and the Fearless ETF Trader, which is for people who trade the ETFs. But the most important index, in our opinion, is the Russell 2000. And this is the ETF for that index, the IWM. There are 2,000 stocks. It's very difficult for any big trading group to manipulate this index. And the actual top in this index was March 4th of this year, which is somewhere over here. And since that time, the index, the highs have been lower than the prior ones, and we have seen a pattern of declining prices on rising volume, rising prices on declining volume. And this is a distribution pattern that has now lasted 5 months. 5 months is a big, long time to distribute stocks. Distribute means when the stocks go from the big informed money to the naive money managers. And so this is not a good pattern for the long term of the market. And here we can see also the Fibonacci numbers. This is the 50, and we can see that the rally here that we had in the IWM was stopped yesterday at the 50% retracement level, and today turned it down. So that's how the market looks to us right now. We're going to have a webinar here in the very near future, and if you want to be informed about that, please go to our website and enter an email address. We will then send you the information on the webinar, the date and the time. Okay, so you get all the info on our upcoming webinar just by giving us your email address. No name, no phone numbers, no fingerprints necessary. And if you want to know more about our services, if you're not familiar with them, we have 6 subscription services for investors and some for active traders. And this is our website address, dohmencapital.com. Thank you very much for joining us today. And we're going to have these more frequently now. The markets are getting exciting, but if you really want continuous updates, and Smart Trader and Fearless ETF traders are issued almost daily, then consider getting those. Thank you very much and have a wonderful evening.